Let's get more on this complex deal with the CEO of EchoStar, Hamid Akhavan, joins me right here. Market not taking it particularly well. We'll get to that in a minute, but let's sort of start off on why you even chose to go down this road. Why do this deal?
Great to be here, David. Thank you for the opportunity. Look, I think it was the right time to do this. I think the industry, the content industry, the content distribution industry has been on a decline, losing customers in a rapid pace to the streaming. I think there's been attacks by the programmers, by the new tech, and this was the right time to bring the companies together. So we could create a company that ultimately had enough ability to negotiate better deals with the programmers and bring the smaller packages to the market, more bite-sized packages, which the consumers are asking. I think this was the scale game that kind of puts us in a level playing field with the with the competitors in the market. I think so. That's one angle. The other angle is that we have a wireless business that is nascent, that is growing, and we have a tremendous opportunity there. We couldn't feed that business properly. I mean, this was a challenge for us, and just the focus of the company being in multiple directions was also a management distraction. This addresses all of that in one setting.
Yeah. All right. So, I mean, I've tried to go through what is a very complex deal from a capital structure point of view, but essentially it reduces your outstanding debt and it puts your maturities further out into the future, allowing you to do what with this wireless business, Hamid?
I mean, this is the largest telecommunication market in the world by far and away. I mean, there's so much opportunity in this market with AI, with additional technological advantages coming into the market, but 3 carriers is not enough. I mean, most other countries even have more that are smaller, and I think there's there's a dominance between the 3 carriers that are there. They each having more than 120 million subscribers, and there's not much trading happening in a consumer space, and all kind of plateaued. We are entering this market with a new technology, with a new attitude and a new ability to shake this market, and we're going to take advantage of that.
What does that mean, a new attitude? I mean, an attitude may not be enough to win the hearts and minds of consumers. You're going to have to come with a product they know is going to work at a price they're willing to pay.
And we are doing that. We are doing that. In fact, today, if you look at our offer in the market today, we have a year worth of free service with no obligations, no contract, no trading, no obligations of any kind. Come in, buy a phone, and you get 1 year worth of free service. I would like to see if the others can try that. I want to see if the others can try that. It is we're just warming up. So there's a lot that we could do in this marketplace.
But what are you going to do over these next few years? Because obviously investors today are trying to understand this. They're looking at a company that is, again, going to reduce its debt, certainly significantly, but also getting rid of most of its cash flow as well. So how do you deploy capital to get to this position you're talking about where you can be a realistic competitor to AT&T, T-Mobile, and Verizon?
Well, first of all, we don't have any legacy. So from a cost structure perspective, from agility perspective, we have advantages others don't have. We have a pure 5G network that's based on open RAN, open software technology, open interfaces. We don't have any of that legacy. So we can be very nimble and we can manage our cost structure better. Plus the fact that we're relying on 2 networks nationwide that are roaming partners for us. So we immediately and already have arguably the best coverage in the nation, access to more towers than anybody else. We can concentrate our focus where we can make the biggest competition and biggest concentration of our capital and success. So the times are different than when the other guys were in the market. Now we're walking in with those advantages. And just watch us. We certainly are planning to offer very disruptive packages.
What brand name are you going to be offering these services under?
We are going to stay with Boost Mobile, and we are going to be the first ones. And in fact, I think over time the others will come to the same conclusion that prepaid and postpaid are not different products. I remember 40 years ago when we started in the mobile business, that's the way the segmentation made sense. Today, that doesn't make sense. So we think that prepaid and postpaid are preferences for payment. And the consumers want a choice in between. So the consumers want to have, pay some down payment, whatever they feel like paying, pay the full amount. They don't want to be binary divided. We already have started that. For us, it doesn't make sense to, divide our money into 2 different brands or multiple brands. I think the others will end up there as well.